According to Tom Lee, Bitcoin hitting an all-time high will drag the stock market up as well, and why Bitcoin will hit 1.5 million in the next 5 to 10 years. Stay until the end of this video to find out everything you need to know to get ready. Now, let's take a quick look at this video from Tom Lee.
Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap Granny Shots ETF. This is our update for the week of May 16th. I want to cover some particulars first. At the end of May 16th, the price of the ETF is $21.07, net asset value of $21.05, and total assets of $1.086 billion. Over the past week, Granny Shots gained 6.36%. The S&P gained 5.33%, which means the Granny Shots outperformed by 102 basis points. Year to date, Granny Shots is outperforming the S&P 500 by 323 basis points, of which since April, Granny Shots has outperformed by 843 basis points. I want to give you some thoughts on the market. I think that this is the second week that I feel like things have returned to normal, or the second consecutive week that the stock market has felt normal. And what I mean by that is we haven't had disruptive events. For instance, there haven't been any tariff provocations, no controversial Truth Social posts, no Fed versus White House spats, no CEOs getting lambasted. However, we did get a Moody's downgrade of the US government from AAA to AA1. Now, this ratings action took place on Friday, May 16th, so just about a week ago, but we don't believe there's much signal here. One of the reasons is that Moody's is the last to downgrade the US from AAA. The first one was the S&P Standard & Poor's in 2011. That was a lot of signal. The second one was Fitch when they did this in August 2023. And of course, now we have Moody's. So they're really the third ones. I mean, in some ways, let's be realistic. The stock market and the bond market would have already figured this out. Like I said, the bond market anticipated the ratings change. And the US essentially lost its AAA status because of the way split ratings work in 2023. And realistically, the corporate cost of debt is largely unchanged. I mean, even high yield has barely moved. Corporate earnings visibility is largely unchanged. Demand by consumers isn't really going to be affected by this downgrade. And I think bears want the stock market to fall, but to me, this is purely just incremental, and I don't think there's much signal. And that gets us to this point, which is, in many ways, this remains one of the most hated stock market rallies. You know, it seems like investors are looking for reasons for stocks to fall rather than for stocks to rise. And part of this is understandable. We had a black swan event in post-tariff liberation day, and a black swan event meaning an unexpected event, and we had a 20% fall in stocks in a very short period of time. But most hated rallies are not something new. After the COVID low, that was a most hated rally. When stocks began to rally after March 2020, many fund managers said we're still in a bear market. And recall, in the fall of 2022, after the markets made its low in October 2022, a lot of investors were saying that this was just another bear market rally. Investors are about to make a mistake again. So again, a most hated rally. And of course, we have the same chorus of skeptics saying stocks have had a good bounce, but we think we're going to retest the lows. But here's the reality. Investors flip bullish as soon as you make an all-time high. So in other words, investors generally fight after a decline, they'll fight the rally until you make a new all-time high. So basically what happens? Well, at a new high, they turn around and become bullish. And I think that that's going to happen, that as soon as markets make a new all-time high, they turn bullish. And here's where things stand today. We're more than 17% above the lows, and only 3% away from the highs. So it won't take a lot for investors to turn bullish if we can reattain that 61.47. So is there firepower to drive this? Yes. For instance, in the latest Bank of America Fund Manager Survey, the US stock market is the most consensus underweight. In other words, most fund managers agree to underweight the US. Well, that's a contrarian signal to me because when they're all underweight US, that means that you've priced in a lot of bad news. Similarly, hedge funds have increased their short futures exposure on stocks at the fastest pace in more than a decade. Again, to me, that's a contrarian bullish signal because you've already seen people position for stocks to fall. And I think at a minimum, this keeps pullbacks shallow in the stock market. One of the leading indicators for stocks is Bitcoin, and Bitcoin hit an all-time high this week and has continued to power through that. So Bitcoin's prior all-time high was January 2025 at 109,000. And on May 21st, Bitcoin made a closing high above that level and has continued to power higher. I think that's a leading indicator for the S&P because Bitcoin peaked about a month before the S&P did. And they're both being driven by the same thing, that global liquidity is increasing. And this tweet by Raoul Pal really highlights the relationship between Bitcoin and M2. As for granny shots, now when we break it down by themes, again, there's 7 themes in the granny shots. Seasonality is the best performing relative to the S&P, outperforming by 320 basis points. Again, this is led by Palantir. The second is global labor suppliers, and that's led by stocks like Tesla, NVIDIA, AMD. And the third is energy and cybersecurity, and that's led by names like ANET, Palantir, GE Vernova, CrowdStrike, and Palo Alto Networks. Finally, before I sort of close this video, just want to remind you that really, if you look back at the last 2 weeks, but really since April, one of the lessons we've learned is it really paid off to actually not do too much, take too many dramatic actions. I know it's really hard instinct to fight, but it's a reminder of the rule of 10 best days that if you miss the 10 best days in the stock market, you really have dramatically lower returns. And I've talked about this before, but to give you an example, since 2015, the S&P's returned 12% a year. But if you miss the 10 best days, you've actually had negative 10% performance or 2,200 basis points of underperformance. So please remember to not time the market. That's it for now, and I'll speak to you soon.
Hopefully, this video will keep you informed for what's next to come in the stock market. Here's another clip of Tom Lee explaining why Bitcoin will hit 1.5 million, followed by another clip of Kathy Wood also explaining.
Bitcoin is a little bit like a Swiss Army knife because it really does meet the fact that it's a risk-on asset, but it's a network value asset. And I think that as more people adopt Bitcoin, it still explains most of the increase in price. And of course, it's a great safe haven asset. I mean, I think for the next 10 years, I think the easiest way to think of Bitcoin is that it should have the same network value as gold. And gold, if it's a $23-30 trillion asset, that means Bitcoin should be at least $1.5 million per Bitcoin.
We'll jog over to another part of the big ideas that I know many people enjoy, and that is about crypto assets or digital assets. And you'll see how we get to our base case for the Bitcoin price and our bull case. Many people know us for our bull case, $1.5 million, and we actually think the odds have gone up that our bull case will be the right number because of what is becoming the institutionalization of this new asset class. So many institutional investors are now looking at Bitcoin and thinking that they need to add it to their asset allocation because its return profile looks so much different and its risk profile looks so much different from all of the other assets in their portfolios.
That's it for today, folks. Don't forget to like and subscribe to the channel and click on the link below for the free community. Thank you for tuning in and see you next time.